Talk about a few of these key levels that we should watch out for. We've got Nilesh Jain as well as Dharmesh Kant joining us this afternoon. Nilesh, I'll come to you first on the charts and on the levels. As much as they matter right now, we're seeing a technical pullback perhaps. So the question is, do you buy into this, Nilesh, or do you hold out? Do you wait for the dust to settle? What would you say?
Very good afternoon to you, Alex. Good afternoon, everyone. A similar kind of a pullback move we did see on Monday as well. But today we open on a gap down note, and now we are making a similar attempt to fill the intraday gap. But looking at the overall setup, today Nifty's low that is placed somewhere around 24,300. That is acting as a very strong support because that's the support area, and these are the levels that we have seen earlier last year in the month of July, August, and similar kind of rebound that we have seen over in that particular time. So overall, as of now, looking at the broader structure, which has already turned on the negative side, so we can expect merely a pullback since the Nifty RSI, which has gone into near about oversold territory at 30. So a technical bounce that cannot be ruled out, but these pullbacks are unlikely to be as sustainable. And on the upside, 24,600, 24,650, that's the immediate resistance zone that might be tested on this particular pullback. But overall, I would rather wait for a confirmation about 24,800 to call it as a short-term base, and then probably we'll get more confidence to ride this pullback up to 25,000. But as of now, I would rather wait for dust to settle down, as you have rightly pointed out, and I'll keep an eye on important support that has shifted to 24,500 on the closing basis. If Nifty manages to close about 24,500, then yes, tomorrow may be a pullback continuation day.
All right. Individual counters, Nilesh, or would you say that you should wait for a bit? Are there still pockets where you can deploy?
Well, absolutely. So we are keeping an eye on metal space as a whole, specifically aluminum play, that's Nalco. We have already recommendation this particular counter to our client as well. And on the technical front, we have seen a very strong pullback move on Monday. Today, we are witnessing a follow-up move. In spite of such a sharp sell-off, we are witnessing. So this particular counter is outperforming, and we are expecting a pullback move to continue on the upside towards 380 to 385. And one can keep a stop loss below somewhere around today's low at 361.
Dharmesh Kant also joining in today. Nilesh, of course, stay with us. Dharmesh, are you in a holy mood? Or did you come prepared to celebrate today? Because in Bombay, people have celebrated yesterday. I think you're in a bit of a holy mood. But have you managed to celebrate through the day at all with everything that's happening in markets?
Yeah, good afternoon, Tavanna. Happy Holi to you and to all of you. Yeah, definitely the hangover of yesterday is being carried forward to today. And I thought it would be a bit different the day, but it's not panning out that way. And it's a very doom kind of a scenario across the dealing room and the people and the Chennai's everywhere. And the worrying factor is post-December, the last 2-3 months, what we have seen whenever the selling is happening in the market, it's throwing everything out. And that is what is worrying the investors as well. I mean, the only question they are asking is not about on the fundamentals, but about why such aggressive kind of a selling is always, occupied on any news flow, whether it is a slightly negative or, grossly negative kind of a news flow. So that is what is hurting the entire space.
Dharmesh, to come back to you, because I think we're having a little bit of problem with your frame, with your feed. We'll come back to you once that is settled. In the meanwhile, let's go across to Puneet, just to get you a check of what the F&O setup looks like. Puneet, oversold zone for the Nifty 50, and a lot of people calling for a sell-on-rise strategy. What are the F&O cues telling you?
Alex, you are seeing a lot of markets, especially in the auto space, that are seeing selling out. And the safe spaces in that sense, right? Oil exploration as well as defense, that continues to have money being deployed in those particular stocks. And solar industries as well as Oil India are a couple of them that are seeing long build up today. When you also see short coverings in that manner, you are seeing stocks like Infosys actually out of, on today's trading session, as well as Oracle. So the IT pack seeing covering of shorts, but not in terms of with rigor in that sense. So Infosys looking at 1.7%, but largely seeing only a little bit of coverings in terms of shorts, still very depressed in terms of what the last 1 month has been for the IT names. In terms of the other key stocks, in terms of long unwindings, steel names as well as PSU banks, both spaces that are done well, seeing longs being unwinding to profit booking year as well. And finally, in terms of shorts being built up in the system, Petronet LNG, led by factors that we've discussed since the morning on the Israel-Iran conflict, as well as Qatar stopping the gas supply, is some of the key aspects. And Tata Steel is the other one that is seeing build up of shorts, yet again, stocks that are done well. So overall, these are some of the key stocks that we are tracking at this hour, a lot led by what's happening globally as well.
And what's happening globally is really where the story is. Aditya Rajkol joining us from Tel Aviv now to get us the latest developments. Aditya, first, I hope you're doing okay. I think the entire world is following your reportage from Tel Aviv and all of the inputs that you've got from what is the scene of action, even though it's looking very serene and people are, I think, permanently jogging where you're standing, because wherever I see you on TV, there's someone jogging behind you. Having said that, the news flow is suggesting that the fighting is only getting more intensified.
Well, that's right, Tamanna. What we are reporting from Tel Aviv is normalcy, a sense of normalcy out here for the people, because they're used to the war. They're used to fighting for years together. So every time there's a siren that buzzes all across and blares across the skyline, there are incoming missiles coming in, so people run to the bomb shelter. So that's part of a daily routine. So normalcy isn't impacted really because of that. But coming to your question of what really is happening out here, from your standpoint and for the business community that is really looking at things and unfolding, the Strait of Hormuz is the central focus point today, because Iranian claims clearly indicate that 10 oil vessels have been attacked. And the Iranian IRGC has also given a threat saying that they will not let any of the ships or the oil vessels really pass through the Strait of Hormuz at this time as the fight continues. So there's a blockade that the Iranians have claimed in that particular area. They also claim that 10 vessels have been attacked already. Yesterday, US President Donald Trump came in and he said that he will be policing this. He will be sending in US vessels and US ships in that area to ensure smooth passing of all the oil tankers in that particular area. But the fighting continues as of now. We'll have to wait and watch whether Strait of Hormuz really impacts the global, oil connectivity and oil trade, because India gets a significant more than 40 to 45% of oil through that connectivity route as well, even though sources in Russia claim that they are ready to fulfill all the needs of India at a time of need. So India has stood with Russia. Russia plans to stand with India in this hour of eventuality. On the fighting line, on the front lines, the missiles are flying thick and fast between Israel and, of course, Iran. What we also know is that several other countries are engulfed in this, including UAE, Saudi Arabia, Kuwait, Bahrain, and others as well. So
clearly, it seems to be spreading, because you have a strike reported in Cyprus. The French are sending one of their destroyers there. But, I'm trying to understand your perspective on this entire news flow that Iran is looking like its position stronger than what was earlier believed, in terms of the amount of ammunition they have, the cost of ammunition they have, and the way that they're striking at Gulf countries. How long will this war last? What's the assessment of people who you are talking to over there?
Well, Tamanna, it was always expected that Iran was preparing for this day. Even when the 12-day war happened between Iran and Israel, Iran had a huge stockpile of weapons, ammunition, and missiles in their kitty. This time around as well, perhaps Iran at a certain point expected that US will intervene in this. There will be a joint US-Israel, kind of a operation against Iran. And they had thousands and thousands of missiles, including long-range missiles, cruise missiles, and ballistic missiles that are prepared already. So what the US and Israel are currently doing, they're trying to dismantle first the air defense system of Iran, and second, the entire potential capacity of all those batteries that are lined up in several launch pads across Iran right now. So all the launch pad areas are being slowly targeted so that Iran is decapacitated of the entire potential of attacking Israel or surrounding countries wherever the US bases are currently. But even though we're talking about Strait of Hormuz, which is completely Strait of Hormuz, which is currently blockaded, apparently. There's also flight connectivity that is disrupted majorly. Ben Gurion Airport here in Tel Aviv is completely shut. They will be, briefly opening it tonight so that the incoming Israelis, more than 1 lakh who are stranded outside, can get back to their country. Outflowing traffic may not be allowed till now. Dubai, Abu Dhabi, and Doha are also slowly, opening up to the global traffic right now, but not a permanent normalcy restored. So it will take some time for entire normalcy to be restored because, as you know, US embassies and US consulates in Dubai and several other locations, including Kuwait, have been attacked in the last 24 to 48 hours. So the situation remains grim. It's very critical and fluid right now. We'll have to monitor developments very, very closely, even as NDTV continues to report from ground here in Tel Aviv.
Yeah, Aditya, very quick last question. It seems to be that other countries are entering the fray as well. You saw the update from France. Is this something that you're looking at on the ground as well in terms of what Israeli forces are going to see in terms of cooperation from countries in Europe? Of course, US has been with them from the start.
That's a very important question that you're asking because many countries are literally forced to enter the war because when we look at France, the French naval base was attacked in Abu Dhabi. Even though there were no casualties there were some injuries that were and some infrastructure damage. But at this point in time, France has said that their Rafale aircrafts are circling around the airspace and ensuring the safety of the naval base. Apart from that, UAE and Qatar have announced that they will not, in fact, engage in a war or retaliation against Iran at this stage, but they have the right to act. At the same time, Saudi Arabia, apparently through sources in Saudi media, have been saying that the Crown Prince has said that he will be retaliating against Iran. Whether Saudi Arabia enters the war to support United States at this particular time remains to be seen, because that will be a historic moment, really, that the Saudi Arabia is opening its military and, of course, air capacity to, in fact, have attacks against Iran. So the entire conflict seems to be widening at this stage. It almost seems like Iran is at a cusp. Will democracy be restored? Will there be a new governance mechanism? Or will the same old Iranian regime continue to operate under Mojtaba, who's the son of Ayatollah Khamenei? So we haven't seen the end of it. It seems it will take a few days or perhaps weeks for the end of the escalation or some kind of an off-ramp.
The off-ramp is what matters. Meanwhile, it's really pleasant to see that view behind you, Aditya. Stay safe in Tel Aviv. Aditya Raj called there. Reporting from Tel Aviv. Now, meanwhile, the point that we were making, it's a claim by a senior IRGC Navy official who says more than 10 oil tankers have been struck in the Strait of Hormuz after ignoring Iran's warning that this is a war zone. So this picture coming in from media reports and looks quite worrisome at this point. Mihir Vora, CIO of Trust Mutual Fund, joining us this afternoon on India Market Close as we try to make sense of what's happening around us. Mihir, some recovery from the lows from markets, but would it be fair to say that we don't really know if we're going to see a de-escalation anytime soon? Would you say that this is the sign that there would be a reversal, or there's more to come?
Oh, absolutely not. This is a time where everything is up in the air, frankly. We don't know how long this can last. So right now, it's more of a wait and watch as far as the markets are concerned, market view is concerned, frankly. Because, when the war started, the stated objectives were to keep it short, but there are lots of moving parts and it's too early to take a call on which direction or what time length is going. And this probably is a critical time because unlike in the Ukraine situation, this time around the oil supply and the gas supply, etc., for the world are disrupted quite more significantly than before. So it is a situation which is trickier than earlier.
Yeah, okay. Mihir, hi, Alex here. I'm just wondering from the perspective of a money manager that has most of their assets here in India, and what is your approach going to be? Are you utilizing cash that you might have held strategically? Are you doubling down on certain investments where you think that this is overdone? Of course, at this moment, quite a bit of the market is bearing the brunt of the sentiment impact and the risk of sentiment. So there will be pockets of opportunity. Are you seeing them?
See, this is not a time where valuations matter, frankly speaking. So whatever you like, you have a list ready and you try to nibble. But as I said, it's only been the third or fourth day of activity, and there are so many moving parts that we'd rather conserve the cash that we have currently rather than try to hurry the situation. So normally we don't keep too much cash in any case. Typically 5 to 7% is the 4 to 7 I would say is a normal range. So we are within that range. But we are in no hurry to deploy, frankly, because there are, as I said, lots of moving parts.
Okay. On the fundamentals that could have changed dramatically for the pockets that you're monitoring, and obviously the oil and gas pack is something that you looked at very closely. Fertilizer stocks are one that are bearing the brunt. Several other stocks obviously react to a sharp increase in oil prices, transport and aviation among them. But from the pack that you are looking at, maybe even in the financial space where you saw private banks today, Mihir, this morning, a couple of them open with cuts of 3% and then recovering from the low point. You're saying that you would hold off on significant deployment at this moment. But are there opportunities that you see will arise?
Oh, absolutely, because we have a portfolio which is 90+% invested, right? So these are stocks that we like in any case. So one option is, of course, to spread it across the existing portfolio. Other option is to see if, because of the war, certain stocks get corrected or hammered down a bit more than expected, and then you try and pick and choose the opportunities. So we'll kind of use both the approaches. We'll look for new opportunities where stocks get hammered down because of the situation, and we'll also add to the existing portfolio. But as I said, we are not doing anything in a hurry as of now.
Mihir, I wonder how you are looking at the contrarian view on IT right now. Is it in relative terms IT is looking safer than the rest? Would you nibble at IT, at private banks today, maybe even in L&T?
Oh, absolutely. Because, as I said, right now, it's not a question of valuations. Because when the market turns, frankly, it's not the cheapest stocks which will go up. It will be the stocks which earlier or even continue to have the positive momentum in terms of earnings growth, etc. So buying value for the sake of value is typically not our strategy. Having said that, certain pockets like IT had become overdone, had become, too cheap temporarily, I would say. And while our view on IT has been negative, there is always a consideration from the benchmark. So we were quite underweight versus the benchmark. And with the kind of hammering that is happening in IT, it was anyway a good time to start reducing the underweight, as I would say, from an extreme underweight to a less underweight position. But that, frankly, had nothing to do with the war situation. We would have done it in any case because of the the AI event-driven hammering that the IT sector went through. So it's always good to lock in your gains, relative gains, because when you're underweight and the sector underperforms, then you make relative gains. But then you want to lock in some of those gains, so to say. So we've been doing that, but that's irrespective of the war situation.
Here, often events like these are looked at in retrospect as opportunities to have bought in a large way. Is there a reason why you're saying that you would like to hold your horses? You would like to wait? You're not in a hurry. What if this gets resolved at the end of the week? Nobody knows. And if that does take place, this would have been a blown opportunity. So why are you saying hold your horses?
I'm talking from my point of view because we are anyway invested, right? We are always 90+% invested. So the opportunity cost of that extra 5-7% cash is not that great, and because we anyway would be picking stocks when the situation turns. So that much cash we would like to preserve in any case. But having said that, this sell your jewels and buy stocks kind of a situation is still not there. Frankly, the Nifty is only a few percentage away from the peak. While the broad market has seen a lot of correction, it's not a panic or a bloodbath kind of a situation. So that, once in a lifetime opportunity would come when, if I hope not, but if the correction is far sharper. So far, I would still call it a normal market correction. The good thing is that with India having underperformed for quite some time, we may fall significantly lesser than some of the other markets. So if you see the reaction in Korea today, the market's down 10% and almost 15-20% down in the last 2-3 days. That is because of the stretched performance of Korea in the last 6 months and 12 months. The market's almost doubled and tripled. A lot of stocks went up crazily. We haven't done anything, frankly, for the last 1.5 years. We were the anti-AI trade, so to say, ignored for the last past 1 year. So we may not react as badly as other markets in case there's a downturn, which is a good thing. As I said, even before this correction, we had corrected to a level where valuation comfort was there, where there was growth visibility. Now that still remains, but if the situation elongates, the war elongates, then the growth part also might start coming into question. That's why we are a bit cautious. Otherwise, anyway, we are 90+% invested. So if the market turns around, we are happy.
Market turns around, everyone's happy. I don't think anyone will be sad today. Hopefully, it'll be sooner than later. There has been a decent recovery. I wouldn't say a sharp recovery, but some decent recovery that we have seen. Thank you so much, Mihir Vora, for speaking with us. Always a pleasure to have you on. Going across to Puneet now, who's joining us with our stock of the day. And our stock of the day is Larsen & Toubro. Battered for obvious reasons, but smartly off its lows today. What's the story here, Puneet?
Well, thank you for that. Definitely a stock that's seen some recovery now, but was down almost 5% today as well as on Monday. Now, there are two key numbers here. 37% of the company's order book comes from the Middle East. That's point number one, and almost 33% of the company's net order inflow in the 9 months of FY26 has been from this region as well. What's the bigger number that you need to focus on is that 55% of these orders are fixed price. That means that if there is a cost escalation because of the factors that we are seeing, the company will not be able to pass those on. And hence you saw that reaction over the last couple of days and just seeing some buying as we're putting on the stock of the day. The other aspect of the order book concentration from the international exposure, it's almost 49% of the company's current order book that comes from the international space, and that's largely from the Middle East amongst other key regions. Saudi as well as the other key regions do dominate, as well as the UAE do dominate that. So when you look at the next point, almost 80% comes in from the Middle East, and go across to the next one as well. You see Saudi as well as UAE largely contributing. This is a very important chart though. For almost 37% is the L&T's exposure. What about the peers? It's much lower than L&T. So it's almost 20% for KEC and 8% for Kalpataru project. This is exposure of the Middle East in their current order book. So you're seeing a much bigger impact here. And when you see the revenue contribution for FY27, Saudi as well as UAE contribute almost 28% consolidated, and any what we are seeing friction in Saudi as well could have a material impact on this counter. Now there is of course what we've seen about the hydrocarbons as well as the other key sectors, but the risk outlook is something now that potential disruptions in the current orders as well as the workforce and the manpower, those are a risk factor as well to watch out for. Finally, I just want to quickly highlight what brokerages have been saying, because while we've been highlighting this key aspect, 82% still hold a buy call, and this is brokerages across the board that have on L&T, while roughly about 20% is the return potential that they also see even from this current market price. A couple of notes which came today as well as yesterday, Macquarie was one of them. They have a target price of 4,910 rupees, continuing to maintain that while this conflict could have an impact on L&T, they've maintained that they see some margins could be impacted at this point of time for Larsen & Toubro. And MK had a much more interesting point here as well. They see that for Q4, the management could have given some guidance of 5.9 lakh crore in terms of order book. That is a number that we continue to monitor. So overall, while there has been a lot of pressure, brokerage is continuing their positive momentum for now and awaiting commentary for the big Q4 at this point of time.
Okay, important. Thanks so much for putting that into perspective for us. By the way, in the meanwhile, you have had Larsen & Toubro stock price recover as much as 3.5% from the low point of the day, now trading with cuts of about 4%. Dharmesh, quick view from you on whether you see this is an opportunity to add a portfolio stock in the past, and there's no question about the size of the order book. It's only about the tension in the Gulf region and the potential impact on the revenues going forward. What do you think about this?
Yeah, Alex, I mean, there are 2 points. One has been clearly highlighted about the near-term impact on L&T because of its huge exposure in the Middle East. And the second point is around 23% of the consolidated PAT comes through IT services, that is LTIM and LTTS. So those are the two overhangs in the near to medium term on L&T. I think IT overhang will continue with it. But if you go back into the history like Gulf War and all, but that time also L&T was having a significant exposure, over 20% of the order book was from that area and they were building on that. but post that they got more work. So I think from a structural perspective, it's a good buying opportunity, but it all depends upon the length of this duration of the war, which may continue. I am having a bad sense about this. If it turns out to be a Russia-Ukraine kind of a stretched conflict, then definitely, I mean, even these prices level would be sustainable volatility and there would be further drawdown on the stock price. So as of now, we are waiting and seeing it. We have not taken a sell call on NLT as yet, but we are watching from the sidelines.
What do you have a buy call on, Dharmesh?
Sorry?
What do you have a buy call on, if anything?
Tavala, this is actually a very critical, difficult market. The point which I was trying to make earlier in our earlier discussion was that the type of selling which we have seen in last 2.5 months was as if people are waiting to sell, and because of some news flow or some triggers, the selling was activated and it was hurried up, and that's not a good feeling. So I mean, war declared was on Monday morning, but if you see Thursday or Friday kind of a selling which happened in the market, despite of any news flow coming in, was disturbing, and we were discussing that only, and Monday morning this news flow came through. So my sense is more or less it's more to do with the valuation resetting of the Indian market. I mean, it's a detailed, long discussion we can have later on. We are already working on a report. But the idea for a tactical buy for this kind of a selling opportunity is go with the strength. So where there was strength, buy those. And I think public sector bank was showing a great strength before the selling came in. So those are the good areas to, taking a trading or tactical bets out there. Followed with automobiles. So these two are clear winners whenever the market stabilizes.
Okay, stay on with us, Dharmesh. Just getting a commodities and rupee view as well. Navneet Damani, Head of Research Commodities at Motilal Oswal Financial Services, joining us this afternoon. Navneet, very good afternoon to you. Let's get the take first on gold and silver. Today, a bit of softness versus the dollar, really. But is it a no-brainer that we might see another mini rally in gold, considering that its safe harbor properties will become more attractive over the next few days as the conflict looks like it will stretch out?
Well, good afternoon, Tamanna. And as the conflict started, we saw gold prices moving from $5,000 to $5,500. But eventually, what happened is over the last 3 days, prices have cooled back from 5,500 to back to 5,100 odd levels. Market has started to discount a lot of things other than the war also. Typically, the rate cut projections, which were now 3 rate cuts possibly in 2026, is now down to about 1 rate cut. Dollar index has been rebounding. We have seen lows of 96, and now currently as we speak, it's about 99 levels. And the possibility of an inflation spike is what is having a bigger overhang at this point in time in the market, which is kind of not going too well with gold and silver as a commodity. Gold definitely is a safe haven and will come into action as and when the war kind of news escalates. But silver typically is witnessing a lot of slowdown, predominantly because the use of industrial commodities, industrial metals, because of higher inflation price, higher energy prices, will take a beating, and that is what we've been seeing on aluminium, zinc, copper, as well as on silver.
Okay. So that's a view on gold and silver. Navneet, hi, Alex here. I'm just wondering what your call is on the rupee as well, because the latest bout of depreciation in the rupee is on account of the strength in the dollar. And this is a strength that is across a basket of currencies. And you are seeing perhaps signs, maybe you can tell us, of the Reserve Bank of India stepping in to curb that volatility. But do you see a further slide possible in the rupee, further weakness?
Well, there are two parts to the rupee narrative. One is predominantly the dollar index, which is strengthened from 96 to 99. And second part is a sudden spike in crude oil prices over the last 4-5 sessions, where prices are up about 18-19% in a matter of no time. For the last 1 year, crude oil has been pretty much range bound within a $55 and a $65 bracket. And it was very comforting as far as inflation was concerned. But now this sudden spike and control of Strait of Hormuz with the Iraqi soldier is definitely a negative news for the rupee, because almost 50% of oil coming into India is passing through the Strait of Hormuz. So on the global framework, it's about 20%, but in the Indian framework, it's 50%. So risk premium, insurance premium, cost of oil is going to definitely go higher, and that is going to be a negative impact on the inflationary scenario. Our purchasing cost for the oil will go up, and that is what is kind of impacting the rupee at this point in time. My sense is maybe 93 or 92, 80, 90 kind should be a short-term top, and RBI should step in around those levels. This will coincide with dollar index at 100, because reaching 100 and sustainability going above that will give us supply shockers to rupee eventually. So my sense is that 100 for dollar index and 90 to 70 or 90 to 90 for rupee will hold for the next few days.
What is the level that the rupee can fall to, Navneet, if you see crude spiking up further? Because from the action that we've seen in the last hour or so, where 10 tankers have been attacked by Iran, it seems crude prices could be heading north again.
So if something like that has to happen, and if dollar index also breaches above 100, then maybe dollar index next pit stop is 102.5, where rupee also could slide toward 94.5, 94.70.
Okay. 94.70 are the levels we could look at. Thank you so much for speaking with us today, and just giving us a sense of where rupee and gold will go. Navneet Damani there, commodities expert. We're going to take a very short break. I'm just going to pull up this post from Nitin Kamath of Zerodha before we go into that break. I thought that was quite something. He says the market is too calm given whatever is happening. I'm not sure it should be, and even that is making it even scarier. Do you think the market is too calm? Tell us what you think. We're waiting to listen to you. We'll be back after a very short break. Stay tuned. Welcome back. You're watching India Market Close. All right, a quick look at what's happening in the markets. I want to pull up the Nifty intraday because a bit of a slump again, still in that 1.5% drop range, but after some recovery, you have a little bit of a downtick. So it's clearly a sell on rise market, even if the rise is that minuscule. You're still about 360 points down. Nothing really to cheer there. The Nifty IT is the lone ranger in the markets today, in the sense. Pull up the Nifty IT intraday, and that also off its highs, but Nifty IT seems to be turning into a bit of a contrarian play. What's hurting the most? Of course, your gas stocks. Petronet LNG, MGL, all of them seeing a fair bit of pain today. Tires as well, JK Tires, all your steel, Tata Steel, SAIL, of course GAIL, coming in with most pain. On the other side, look at what's happening with sugar. This is turning out to be an interesting side story, really. Balrampur Chini about 7% up. All of them, if you pull up all of those sugar counters on your screen, you will see some interesting moves on sugar stocks as well. The reason for this is some sugar refining facilities in the UAE are also not really firing right now, and that's giving a good fillip to our domestic sugar companies. You also have the chance of ethanol being required in higher quantity once crude prices go up, which is why sugar is tasting even sweeter today as far as the stocks are concerned, at least. But I want to pull up European markets for you, and I found this quite interesting. Look at how Europe has opened and is sustaining nearly 0.5% up or thereabouts on the DAX. The CAC also in the green, a little over 0.25% up, and the FTSE completely flat. US futures also not as bad as they were. Could you see some signs of recovery, at least coming in from Europe? Not so for Asia. I mean, South Korea's Kospi witnessed its sharpest fall since 2008, battered by escalating Middle East tensions, surging oil prices, and aggressive profit booking. Chip heavyweight Samsung Electronics, SK Hynix was sliding sharply. A weakening won is also intensifying foreign outflows. My colleague Hiral is joining in for more on what is spooking the Kospi even more than other Asian markets.
Absolutely. You know, I mean, a 20% plunge is what you've seen in totality over the last 2 days when it comes to the Kospi, and a sharpest 2-day decline in the South Korean stocks since the 2008 financial crisis. Now, if you talk about Kospi, it's gone from the all-time highs above 6,200 to a free fall below those 5,300 levels already. Along with that, if you see the broader index, which is Kosdaq, that has also fallen by around 13% in intraday trade in today's session. Now, very quickly in terms of circuit breakers, the fall triggered a trading halt on at least 2 occasions, and the trading was halted for 20 minutes after that initial 8% plunge. In fact, the circuit breakers have been triggered for the first time in 576 trading days. That's what you're looking at. Now, if you talk about the market value that has been wiped out, you're talking about almost $270 billion that has been wiped out in a single day. Now, let's understand what are the key reasons. First up, the Middle East geopolitical turmoil is what is impacting markets across the globe. Now, energy supply fears is the bigger one because South Korea is the world's 4th largest oil importer. So it is really very sensitive to swings in terms of oil prices as well as geopolitical shocks in the Middle East, and rising energy costs could actually go ahead and put pressure in terms of industrial as well as the export-oriented sectors in South Korea. Secondly, you're seeing profit taking that's coming in because Kospi is one of the best performing markets so far in 2025 and YTD 2026. The gains have actually extended in 2025. 75% is the kind of returns that you've seen. And if you talk about the index, it's gained nearly 50% in the first 2 months of 2026. So you understand why the profit booking is coming in as well. Secondly, as Tamanna was mentioning, the semiconductor sell-off. Now, the investors had actually continued to pile into AI and semiconductor themes, where there was a lot of diversion that happened into heavyweights like SY Hynix, Samsung Electronics. Both of these counters are the ones actually who are leading the losses on Kospi in today's session as well, and are already down 18% in the last 3 trading sessions. And the Korean won, which is weakened past the 1,500 per dollar for the first time in 17 years, that has led to almost 1 trillion won worth of equities outflow in a single day. What next is the key from here on? Now, the authorities are preparing a 10 trillion market stabilization fund to counter this Kospi crash. Secondly, they are preparing to conduct Korea Treasury bond purchases and expand the market operations. And they might be forced to actually keep interest rates higher for a longer term from here on. So they have, a lot of ammo in place as well right now to counter this crash. Whether it works or not is anyone's guess. But this is going to be interesting.
Certainly interesting. Hiral, thanks so much for getting us all of the reasons why the Kospi is under such a lot of pressure, and that market as a whole, the South Korean market under pressure. But speaking of under pressure, you are once again seeing selling pressure emerge for the benchmark Nifty 50. We are at 1.6% on the downside. Let's pull that intraday chart up, and there are a few counters that stand out. Ultratech Cement, pull up the intraday chart for Ultratech Cement and you will notice a pretty sharp fall off from the recovery that you saw. Reliance Industries also being sold into, Bajaj Finance is being sold into. So a few of the stocks that had gained from the low point of the day are in fact being sold into at this point. Let's get Shivangi Sarda, who's an analyst, equity and derivatives and technical at Motilal